Good morning, everybody. Well, today is the last of the 4 weeks of looking at the trend intensity indicator, the components we've used, and how we build it. Today, we bring it all together, looking at some of the uses of the trend intensity indicator. Hi, my name is Richard Lee. I manage the stockradar.com.au website for you. We identify the early stages of a trend, we jump on them, simply follow it higher, and use our risk management process to protect the trade. Be it a small loss or a big profit, our premise is that simple. Okay. We have to endure periods of market calm and reticence to move higher. Since last August, this has been the state of the market. But we must always still engage and protect during these phases. So we're prepared for the market takeoff when it happens. Why? Because it does, but knowing when is a tricky point. So sometimes we're in a difficult stage, but we need to be prepared because the market may take off and we've got to be there. So sometimes we will, this last few months, make it a little bit difficult, getting in there a little bit. We still have some good stocks there, but we just could be a little bit careful and make sure we're prepared for the next upswing, just as we should be prepared for any downswing. It's an endless game of challenges. Over the last 4 weeks, I've dug into the intricacies of the TIR components. Now we can better understand what it is that forms the backbone of Stockradar and how the trading centre, our main trading page, is based around this indicator. Okay, I believe in my observations, I believe in my way, and I do it my way. The buck ends with me and my decisions. I take full responsibility for my actions. There is no one else to blame for my mistakes. I own them. And that's what we need to do. We need to own them and take responsibility for them. So I'm trying to help you, guide you, give you a bit of an indication of how you can do that. Okay, so let's check the markets to start off with. We've had a little bit of weakness in the markets overseas this week, and you can see the Dow Jones now is pressuring the downside, that S1 area that we looked at before. We've had a reasonable amount of selling through here, and the momentum index has really gone out. So we really are seeing pressure on the downside, which is what we've known for quite some time. And if we look at the Nasdaq composite, it's similar, looking even worse, and it's actually starting to move down below this S1 area, which is quite a worry. We've had this lower high, now we're going to have a lower low. We've got a bit of volume appearing here, the momentum's very weak. So really the pressure is still on the downside, and now we have, as we says here, a new lower low for the Nasdaq. Okay, gold futures struggled to now pull back from that resistance area. It can't seem to get through it. A little bit of a bad little whipsaw here, a bit of a snap off here, I think. So we have to watching the support levels as this resistance hold. No real volume there. Momentum is okay. It's above the average, but really this whole area up here, just above 2,000, is the key to the gold price. Brent crude, well, jumpy and dangerous as it always is, but we're now watching this area down here. We've got a bit of range been happening here just below the highs, and with the big support of this big trendy, so we're sort of getting knocked into this corner here, so with a tighter trading range. So I'm watching this area here, little uptrend here, moving average line, the lows across here, could signal a further drop to S2, but we'll wait and see. The volume hasn't been huge here, which suggests it's corrective, so it really is a bit of a mixed message we're getting here on crude, but we're still holding the stocks that we have in that area. Okay, copper, well, it's a similar situation to gold. It's just retreating off these highs. So let's get back to copper first. So we can just see this is retreating off these highs here again, a bit like gold. We're now getting a bit of a test of support down here. So we're in retreat, we're looking towards S1. Volume hasn't been huge. And momentum is above the zero level. It's a mixed message situation again. The failure to break is not a good sign, and would suggest to me S1 is likely to be challenged in the near future. Okay, now let's go to the the ASX 200. Now our market has this nice little resource tone which has been saving our bacon a bit compared to what's happening overseas at the moment. So most of our portfolios are mainly bent towards that area, which is where the strength of the market is. However, this market is still struggling, as we see. BHP and CBA have some big drops this week off those resistance levels, which has been quite interesting. Very, very bullish up until now, but all of a sudden, bang, comes a price. So we can never tell. As I said before, BHP has been very volatile, bit of a dangerous situation. You really need to wait for some sort of trend to emerge that we can jump on. At the moment, it just doesn't seem to have that. However, our ASX 200, it's had a big run up. It's now correcting phase since August. We've now challenged the highs again. We failed there, so we'd likely come back to S1 again. So a bit of pressure on this market. Pretty flat down here. We thought we might have been a spark of life going on down here, but it really hasn't amounted to anything. So the highs are resisting advances at the moment, and we can't get through. So we're going to retreat back again, see if we can gather a bit more buying down here. Okay, so the ASX 200 is actually up 4 this week. to 39 stock picks of 167 covered, okay? So, and 3 ETFs. Now, when I look at the portfolio, that is roughly about 25% of stocks trending, and that means 75% is not. Last night, I went through a whole lot of scans of charts, and I tell you, all the Polynovos and Nearmaps, all those darling stocks from a while ago have all just come back with a huge thud. And I also looked through the before, now, pay later stocks, and they've all had a disastrous time. So there's a lot of the market that really is in very bad shape. So our conservative portfolio, it's actually only got 4 stocks out of 20, so it's at 20% too. So that's the sort of the marker at this stage. That sort of low is not really what we want. The main stocks we have got are the resource stocks in there. So we're actually our 5-stock portfolio is full. This is our more leveraged portfolios, and our 10-stock is also full. So they're the 2 different portfolios to the conservative and the Stockradar stock picks. So it's a high conviction focus on trends that builds these portfolios, and so they're mostly resource based or related stocks in those portfolios at the moment. Okay, now the building a 5-stock portfolio, it's come back to 9.8%. It's been dilly-dallying around 10% for quite some time, and that's been the nature of the market. We're quite happy to do that at the moment because we just don't know when the market's going to take off, and we want to be ready. So we're not taking any losses there at the moment. We're just sort of marking time at the moment. So that's okay. That's the market we've had since August. These portfolios are designed to be prepared and geared to maximise upswings. Okay, so now let's get to a few charts. Firstly, I want to go straight to the BHP chart and have a little recheck on this one here, which is, as you see here, we've got this big high pattern here, which really has stopped us with the thud. We've now come off, we're back down to around $45. We might be up a little bit today, but as I said before, this increased volatility means risk. So this jumpy price is not really surprising. Until we settle down into a more solid trend, are we going to be able to see what's happening. So let me just see if I can... So the volume here has been reasonable, momentum has been good, and this has been good, but the price has failed. So we're still back into this area here. So we're still the barrier to high price. So either it's going to be a new high or a trend reversal from lower levels. They're the only 2 outcomes I'll take in this situation, as much as I'd love to buy BHP. Okay, so now we're going to CSR, unperturbed. There are some stocks who will go about their business and not worry too much about what's happening in the rest of the market. So CSR has been one that I've been watching for a while. The main reason being, sorry about all that, the main reason being that what we've seen here is a big corrective pattern below those recent highs that we've seen, which have been intact since about April last year. So we've got this big high up here, the resistance area, but we've got the buyers here starting to show their strength. So it's almost like a corrective consolidation. So this level here, if it does break, we've got three tests here that's failed. So the more tests, the better we are. The more likely, the stronger the break. So this pattern is quite a big pattern that's occurring here just over a year. So keep an eye on CSR for the moment. It looks to be doing okay. We had some good demand building up here in this last run up. This has moved just above zero, so the conditions are right for CSR, and considering the market form, this is not doing too badly. So keep an eye on CSR. Endeavour we covered a couple of weeks ago, and we've seen a good bounce here. We had a simple new high breakout with a confirming trend intensity rating, so we bought that with a stop. So we're just sitting okay. I think it's probably come back a little bit today, but the gains have been pretty good since we started off in this one. So that's a little early runner for you to follow and watch. Okay, so Endeavour Group still looks pretty good. I reviewed this a couple of weeks ago. This has been an interesting stock, APA, as it sort of bounced around a bit, but it's now starting to get back on its legs here. Let me just blow this up a little bit here. Okay, so now we can see the highs back here, the lows of the range. We dilly-dallied around here for a bit. We had a break here which we took, and it probably took about 6, 7, 8, 9, 10 weeks before we actually started to break higher. So sometimes the timing is an elusive thing, I've found, and if it doesn't go below the stop, then we just hang in there and try and be patient, because if the signals are right, then eventually it will come good. And this has come good straight back to R1, which is a good thing. And again, if we break through R1, that's going to be an incredible feat for APA. So hang on in there. Raise your stop, so you're protecting what you've got at the moment. So we've already got a profit in there. This all looks pretty good. The moving average has been turning up nicely. The volume's been good. Momentum's been good. It's a trend intensity rating of 10. APA is looking very, very interesting and very healthy. Keep an eye on that there. Tighten your stop up because it may not go through. You know how we play the game there. So it's still looking a very interesting stock there. The other one I want to go through is a bit like what we saw in a couple of times the last few weeks, mineral resources. Now I've cleared everything off this chart and come right back to basics of here. We've had a huge big run for mineral resources, but $65 seems to be the line in the sand for that stock. This is where we get what we call valuation resistance. People are just reticent at the moment to pay higher prices because it's too fully valued. So what we are getting though, again, is that we've got 3 highs here. We have got some very good demand showing here, high prices, better volume. Momentum again is seesawing around, so a bit like BHP, the volatility makes it dangerous. So if you don't want to play these stocks, then don't play this stock because it can jump about, and it's had a big drop this week. So and if it gets through $65, then it may well run on strongly, but we'll wait until that comes before we do anything. So mineral resources looks pretty interesting at the moment. $65 means trouble there. Okay, a couple of other little stocks I just wanted to show you and talk a little bit about. One is Netflix. Now we know we've got all the darlings of the Googles, Alphabet, Amazon, Netflix, Facebook, all these stocks that have been doing incredibly well. But Netflix is one that's down about 70% from its highs, and it's been a pretty quick time. So, so the highs up here were October last year, so it's lost 70% of its value in the last 6 months, which is pretty amazing considering the amount of time it took to build that up. This sort of happens, but again, then you've got to ask the question, is this a good business? Because if it's a good business, the price has just dropped 70%, so maybe it's a good buy. Anyway, that's the way I look at the market. It's come down here. I always wait for support to show before I would buy a stock, but it is interesting that we were paying $700 for Netflix 6 months ago, and now we're a little bit lucky to pay $200 for it. So that's the way the stock market works. That's why you've got to be careful. Momentum trading is very good, and also stop risk management is also very good. If you're in the long term here, you've just lost 70% of your value. Okay. Facebook, we know, or meta platforms, whatever you want to call it these days, it's a similar thing. It's down about 50%, down again last night, not so good. So again, another darling stock which has thumped down. So those other ones there, you've got Amazon, Apple, and Google. Now, it's interesting that if I look at Google, it's also started to look a little bit toppy. Okay, we were probably around $3,000. We're now down towards 2,300. So we've also already lost quite a bit of value, but this doesn't look too good because we're not only coming down, we've made a new low here, we're getting good volume, momentum's gone. So it's starting to look like those other stocks were. So God forbid what's going to happen to Google. We just don't know because the stock market always surprises. So, you've always got to look at things in a real perspective. As I say, Netflix has come off 70%. Google looks like it's going to be weak. That's the story. So you've got to be very careful if you're holding these stocks because they are saying they want to go down, basically looking at what the price action is saying. So just an interesting perspective on some of these stocks. Darling stocks, they do come off, they do die, and they do correct, things like that. So these stocks have been priced to perfection for a long time. So maybe a bit of adjustment is happening there, which is probably rightfully so. Okay, so that's enough natter for me. Let's go on to trading tactics. Now, I'm talking about the trend intensity rating system. Over the last 4 weeks, I've gone through the components of it. But I just want to talk a little bit about the trend intensity rating system today and how we bring those components together. Trends occur all the time. We see them occur all the time in the market. The trend intensity indicator helps confirm and identify the early stages of a trend. It's pretty conservative because we wait for the market to turn around and we wait for a lot of evidence to build and the trend behaviour to occur before we jump on. So that's what we're doing. We're not sort of trying to pick the bottom. We're not buying a falling knife or anything like that. We're very conservatively approaching a trend behaviour. And as I said before, in this market there aren't many trends, but what there are very good trends. Okay, so the last 4 weeks we've gone through volume. At the end of March we went through the moving averages, we went through momentum, we went through the trend, and now we're going through the trend intensity rating this week on the 28th of the 4th, and next week I'm going to go to the trading centre and see how the trend intensity rating brings together everything in that trading centre. It combines everything. It's the central force behind that area. Okay, so just to recap a little bit, the trend intensity indicator weighs those 4 simple tools we know: trend, moving averages, volume and momentum. We combine these indicators to give one value between 10 and minus 10, and that's how we rate every single stock exactly the same way. The trading centre is structured around the trend intensity rating system that rates all stocks equally. The TIR generates an invaluable benchmark that highlights only those stocks with compelling trending qualities that offer the best prospects for sustained price movement. Okay, my spiel is over now. That's what it is. That's what it does. Now let's have a look at the features, advantages and benefits of it. Okay, so the features are It identifies levels where trend changes occur. I'm always talking about an alignment of the stars, where you see the price break, it's above the moving average, volume expands, and momentum tricks above zero. That is the perfect storm. Okay, as perfect as you can get, or your probability is as high as you can get. So we can identify these levels very quickly and specifically where they occur. Okay, so we're qualifying and confirming trends, and you have a trend rating system for stocks, so we can see very quickly if this is in a downtrend or not, and if it's how it's rating. Okay, very important because we can very quickly lose perspective on what stocks are doing. Okay, the advantages are it benchmarks the price action, so no stock is different. BHP is the same as Mincor, is the same as Transurban, is the same as Champion Iron. It's the way we look at them, it's how we evaluate them. Okay, consistent process of assessing trends. So I go through the same process if I assess each trend. It's a bottom-up approach, so I'm not looking at the top stuff, I'm looking at the bottom stock, the stocks themselves. It ensures objectivity, so I can't fudge, I can't fool myself. I have to follow the rules, and so that ensures an objective view, and I'm not putting my taint on that. It also gives a rating for each stock. Plus 10 to minus 10 gives you a very quick idea of what a stock's doing. Okay, benefits. What it does is it reflects trend or investor behaviour. We're looking at investors and how they're behaving, and the price action is what tells us what's happening there. So it allows us to make an educated assessment of trend investor behaviour, okay, as best as we possibly can. The price action also offers structure. We've got resistance levels, support levels, entry levels, moving averages. It allows us to more accurately, consistently target entry and exit levels. Okay, pinpoint things a bit more clearly rather than saying, well, this is a good stock, it's making lots of money, let's go and buy the stock. You've got to have a look at the price action and see what the price is doing, so as you know where you're going to get in, getting out, this sort of thing. Okay, the benefits are, again, based on high odds behaviour. So I'm trying to shift those odds into an area where we think there's a trend is going to emerge, okay? One thing is more likely to happen over another, okay? The other business is stock filtering. You can also use the trend intensity indicator as a filtering process. So when I look at charts, there are charts and there are fundamentals. Fundamentals are what tell us about the business, how the business is going, profits, loss, debt, all these sorts of things. And what we look at then, it doesn't always relate into price, unfortunately, because we always have different information. But technicals tell us about the price, and that's what we really want to know: what it's doing, where it's going, up and down, trends or no trend, this sort of thing. So that's why we use price to analyse the market. Okay, some facts and repetitive behaviour. I show the stocks regularly, which I have over the last few weeks, Computershare, South32, NAB, all these stocks. For whatever reason, those stocks are performing stocks, exceptionally well performing. So I show these stocks regularly because they are current big running stocks making us money. We need to look no further. We don't need to look down the other way. We've got stocks that are making us money, and that's the most important thing. And again, I'll tell you a little bit about what I do. I try to find them in a high conviction process. I don't scattergun, so I don't do that. So you can see NAB's up 60%, Computershare's up 67%, South32's up 97%. They're great stocks. So are there any new ones? Well, this is what I'm always looking for, because there are always new ones. There will always be more like these, as there always are. Stocks will always behave exactly the same way. Our aim is to identify them exactly the same way. So it's almost a boring, monotonous process that we go through to do this. But it's how it works, and things keep happening the same way. Humans keep making the same mistakes, doing the same sorts of things, and that's why we look at this. Okay, style and premise. My style is quality, not quantity. So I'm more interested in packing as much as I can into a small portfolio than I know I've got high probabilities of trends occurring. Okay, so I am high conviction in what I do. Okay, so I'm just going to walk through a couple of stocks just to give you an idea. Okay, what have we seen of late? What's the stock that we've seen of late that's done all this? So firstly, what I want is the entry, which is the alignment of the stars that I'm talking about. And if we look down here with James Hardy back in October 2020, we had a break to a new high here. We had the volume starting to expand, the momentum was above zero, and the price is above the average. That's 4 plus, maximum trend intensity rating of 10. Okay, now this also I might know if you might not remember this, but this was a price at around $30, and we thought at that stage $30 was a high price for James Hardy. Well, not so when it gets up to about $60. Okay, so when you get the break, you take the break, you disregard what the price is, $100 or $5, and you just trade it. Higher highs and higher lows, higher highs, higher lows the whole way through. This is a very good looking trend. That's why I'm showing it to you. They don't always look like this, but roughly they will behave like this. So this basically told us to get out here, just under $60, just under $50. So we didn't get the top, but we've got a big chunk of this trend. Roughly, we had an increase in price of about 50%, including dividends. Okay, so that was a very, very good outcome for James Hardie, and that's just a simple trend that occurred over 15 months. And you can see here now the stock's coming down, heavy volume. Momentum's weak, it's below the average, so blow me down. What was a good stock a year or so ago is now all of a sudden unloved, and that's what happens in the stock market. They go up, they go down, always. So that is James Hardie. That's one that we've seen. Now, what are we seeing now? Well, I've talked about Worley over the last few weeks, and it's one that I've looked at quite strongly. It's given me a great signal. The trend intensity rating is +10. It's had a trend reversal background. It had an alignment of the stars down here. Okay, we had the price break. It's above the average, volume is expanding, and momentum is above zero. That is the alignment of the stars. So now we go with this stock. Now we're going to get trend of higher highs and higher lows. Well, we'll have to wait and see, because we don't know what's going to happen. But that's what we are seeing at the moment. And there are lots of other stocks like that I'm watching. Some have triggered, some haven't triggered at the moment. So we're full of them in Stockradar. So that's sort of what we try and do, to try and give you an idea. And again, with this chart here, there's nothing else been in this chart that's given me a signal apart from this point here. And the precision that price analysis offers you with price structure and things like that enables you to pinpoint these entry and exit points really well. Okay, so if you want to do more reading about the trend intensity indicator or about Stockradar, everybody can go to, there's an about section on my homepage of Stockradar, and it's you can just see down here, we go through what is Stockradar, our trading strategy, our services, getting real about the stock market. Yes, getting real about it. Guide to using Stockradar, trend intensity indicator, portfolio service, and 10 steps to trading success. So you can have a look at all that stuff, and that'll tell you a lot about Stockradar and what we do. Okay, so that's about all I have there today. Next week, this newsletter will be out. So really, the trend intensity rating system forms the cornerstone of Stockradar's analysis process. Okay, it objectively and graphically offers a clear picture of perspective, guiding us safely as we all ride through the stock market emotional roller coaster. We're just about taking those emotions out and looking at things realistically. Okay, so with the right expectations, the trend intensity rating system can provide a very reliable and constant trend monitor for you. It gauges the investor mood, providing a high probability assessment of the share price action and if a stock is in the right mood for a trend or not. Okay, so I hope that gives you an idea of what I try to do. I try and keep it simple, I try and keep it focused, I try and keep the emotions out of it, and I also risk manage everything I do. So it's a process of doing all these things, and if you can pull all these things together, then you'll do well. Okay, thanks for listening to everybody today. Stay safe, watch your trends, heed your stops, and I'll see you all next week. Thank you.